Let's start out with the outlook for property developers, because as was mentioned in the intro, we have had some caution in the industry here in the Gulf. Are you seeing that?
Well, I think everyone's gotten more cautious over the last few years. Price of natural resources, just world trade, and I think a slowdown in economies in many parts of the world.
And what about retail specifically? You are building that mall very close by to here, Al Maria Central. It's going to house the Gulf's first Macy's department store. Is now a good time to be tapping into retail demand here in the Gulf?
We think it's a particularly good time to be developing something of this scale. And the reason is because this is part of a mixed-use project, which is what we love to do. So it's not just about retail. It's not just about department stores, and it's not just about entertainment and restaurants. It's really about two great hotels, Rosewood and Four Seasons, a major center of office and commerce that's here. As you can see, the Abu Dhabi Global Market, where we're standing today. So mixed use is really the key to the success of our projects, and it will be the key to this project's success. We are developing a project here combined with a Galleria, which we opened 3 years ago, which when we finish will be the premier platform for luxury, for mid-priced, for family, for entertainment, for food and beverage. I mean, it's a true destination here for Abu Dhabi and the UAE.
Well, give us some color on the consumer demand that you're seeing right now, because we have the drop in oil prices that is hitting government budgets in the region. Is that feeding into local consumer demand?
I think it's hit everyone. I think if you were to gauge and poll all of the regional retailers in Dubai and Abu Dhabi and around the region, I think you'd see many of them are down. But one can say that about retailing around the world at the moment. So I don't think it's generic, if you will, to just this particular region. I think it's cyclical. I think it's temporary. In this part of the world, one of the incredible things we know about how people shop and how they eat and how they entertain is that they spend on average between 4 and 6.5 hours in a shopping center. Many times they'll come for 2 meal periods. So you engaging the success of a project like ours, you have to look at these local trends and local profiles. And I think what we're going to do is change the number of trips that people make from Abu Dhabi to go shopping in Dubai. Dubai is incredible. I mean, Mall of the Emirates, Dubai Mall, I mean, the entertainment, the hotels, fantastic. But we are doing something here that is so unique in Abu Dhabi and delivering all of these exciting features. I think we're going to attract that audience much more often to stay with us here.
Ken, I'll jump in here. Just give us some additional context. When you look at the global property market, it becomes a little bit more difficult to find markets that are in different parts of the cycle. Where would you deploy additional capital right now?
Well, we, in addition to Abu Dhabi, which is the only location here in the Middle East that we're deploying this kind of capital, because we believe so strongly in Abu Dhabi with its airport expansion, with its cultural facilities expanding, and the commitment that the government has made to quality growth and tourism. So we see that as the pillar, the foundation for why we're here. The other parts of the world where we're investing a lot of money happen to be in the United States. Two of the key places we're putting our money, west side of Manhattan, Hudson Yards, and Silicon Valley, Santa Clara, California. Those are two of the major markets we're going into. Plus, we have tremendous investment going on in Southeast Florida.
Ken, Yusuf just asked you about capital. One of the things I'm interested in the wake of the Grand Avenue project in LA, is whether you see more potential for teaming up with Chinese investors and companies, especially here in the Gulf region.
We haven't seen that much interest in investing in development here from the Chinese, not nearly as much as we've seen in the United States. We were very fortunate at year-end that we found a great partner in CCCG, who joined us in developing a Frank Gehry designed project on Grand Avenue in Los Angeles. That's just getting underway. But there has been a lot of interest for the Chinese in going to major cities in America. Gateway cities is what they're looking at. But I can't tell you how long that cycle is going to continue. You know, it's not something you can predict that carefully.
Right. All right. Well, let's stick with the U.S. property market. We have had continual worries about a slowdown in commercial real estate. Specifically, now we have a Fed rate rise next week looking all but certain. What's your outlook for commercial real estate?
You know, the whole industry, I've been in this for over 40 years, the industry is gravitating to core quality asset development. That's as simply as I could put it. So that means best developers, best markets, best locations, best programming, best design. It's got to move to the top of the chain right now in terms of quality. Otherwise, you're not going to attract the tenants and you're not going to attract the users and you won't attract the consumer. Because this is all about bringing the right programming to these projects once you've got the great design. So there's still opportunity in our markets. It's very selected, and you have to be very careful. But there's still opportunity, and we're seeing it on the west side of New York. We're seeing it in southeast Florida. We're seeing it certainly in Silicon Valley and California.